Hey, what's up, everyone, and welcome back to the Path to Freedom podcast. Today, I'm joined by Boris Katsnelson, who's the managing director of Black Iron Advisors. Boris, welcome.
Thanks, Wes. Pleasure to be here. Excited for the conversation.
I've been looking forward to this. You and I were introduced, I don't even know how long ago, but by a really good mutual friend of ours, Dave Pasgan. I'll give Dave a quick shout out. Funny enough, Dave was actually the very first guest that I ever had on this podcast. And he's been back once or twice. So Dave's been a huge mentor of mine, become a really good friend. I heard from a little bird that you taught Dave everything he knows. So I guess that in kind of an indirect way, makes you a mentor of mine as well, Boris.
Yeah, not sure that's true, but I appreciate the compliment.
No, but it's interesting because you guys, the way I understand it, you and Dave and a handful of other, kind of CEOs of franchise organizations all met at a similar time. And you guys were all, leading franchise companies that were kind of in similar phases of, the growth cycle. And you guys kind of formed this. I mean, Dave always kind of described it as like a mastermind group, but, you guys became really good friends and, helped each other out a lot. Many of you, if not all of you, have, gone on to other things since then. But I think you guys stay in touch and still get together on a somewhat regular basis. So just pretty cool. And it's been one of my favorite things about being in franchising is just some of the awesome people that you get introduced to along the way, which is how you and I got connected.
Yeah, 100%. It's such a great community, and everyone calls it the franchise family, right? And it feels like that very much so. And that story actually takes me back to a franchise conference where I met a lot of these guys. Alan Young, who's now running a brand called Art of Drawers, he put this group together. There were 7 of us, and this concept actually has morphed into a franchise itself, believe it or not, called Zor Forum, that Dave is partially involved in. Graham Chapman is one of the guys kind of leading that. So anyway, it's a small world, and those guys have all, still good friends. We still meet, and it's fun to stay together and help each other out on our journey. Dave and I talked, all weekend on some stuff he's working on, and all of us are still pretty tight.
Yeah, it's really cool. Really, really cool. But, so I wanted to have you on the show because, there's a lot of different things that I think you could speak to that would add a ton of value to my audience. But, you kind of have a unique perspective as it pertains to franchising because you've been on both sides of the table. You've been a franchisor, you've been a franchisee with a couple of different brands, been successful on both sides of the table. And now you're involved with helping both franchisors and larger multi-unit and even, just larger single unit franchisees sell their business. So again, just I think a really unique perspective compared to a lot of the guests that I have on the show. So I think there's a lot of interesting topics that we could kind of dive into, but, for the audience listening, why don't you just kind of, quickly run us through, like, how'd you get into franchising in the first place and what was your kind of first foray into the franchising space?
Yeah. Thanks for that. Yeah. I really kind of stumbled into franchising. My first kind of career path was investment banking, then into private equity, and then working on some of the operating companies. We successfully, turned around a business that was in the consumer goods space called Sleep Innovations. And that was a real, my first kind of stint at operating companies. And I had studied this model at business school at Wharton called the Search Fund, or now it's called Entrepreneurship Through Acquisition more commonly. And I was like, I want to do that. And really what it was, getting a club of investors or one single investor. I chose the latter to back me to go find a company to buy and then run as CEO, right? Where there wasn't the succession plan, where there wasn't kind of the founder wanted to step away from the business after transition. And the first deal that kind of hit my desk was a franchisor. And like most people getting exposed to franchising, I didn't know franchising I thought it was McDonald's and food concepts and all that. But as you and I both know, it's massive, right? Thousands of brands out there that, run the gamut from, ones that I've been involved with, preschool, moving and junk removal, to boba teas to smart home innovation. List goes on and on and on, right? So we saw that first deal come across. That was not the one that we moved forward with, but we ended up buying a franchisor called Speed Pro, which is a large format graphics franchise. So think of like big printed stickers you stick on cars, you stick on walls, windows, floors. You can print on material like different wood substrates and all that. But printed visual communication is what we kind of called it. We bought the business a little over 100 units at the time. And that's kind of was my first foray.
And so was there anything like once your eyes kind of got open to the fact that, whoa, there's a lot more to this franchising thing than just fast food businesses, and that first opportunity that came across your desk was a franchisor, was there anything where you're like, okay, I still want to do this entrepreneurship through acquisition thing, but now I'm really intrigued with finding a franchise company to buy, or did it just so happen that the deal that did end up coming together was a franchise?
Yeah, I'm a big believer in general of focus, right? So I found a niche and I was like, wow, this is really interesting. And so I was like, I want to buy a franchisor. So I started going really deep into it and got connected to people that are still friends of mine that, help guide me through that process to educate me. There weren't podcasts like this weren't as prevalent back then, right? Yeah. So where you could get smart on it. This was in 2013. We acquired the business in April of 14. But yeah, I just went really deep into it. Went to the IFA convention, started meeting folks and networking in, and it's where you focus. That's where gold happens, right? And so we got a lot of opportunities in franchising, and that's when Speed Pro crossed our desk, and really kind of thought there was a good opportunity here to take the brand to the next level.
So you actually jumped in to franchising before you knew which franchise company you were going to acquire. It sounds like you started going to IFA and meeting some folks, which is genius, because that's where opportunity happens, just like you said.
Yeah, it was all about understanding the model and saying, okay, how does this work well, right? And franchisee and franchisor, for systems to work really well, that union has to be really powerful, right? In my opinion, right? It all comes down to, 100%. Hitting the right goals and for the franchisee and the right systems and processes and that. And with Speed Pro, we saw really what was kind of a brand that needed a little bit of love that take it to the next level. We put in systems, a new point of sale and business operating system for the franchisees, additional operations manuals so they can onboard clients well, onboard new employees well, and really run their business in a more systematic way. Marketing systems and all that kind of stuff we put in place under our leadership there.
We'll get right back to the episode in just a minute, but if you've been considering business ownership, if you're already a business owner looking to expand and you're curious about franchising, I'd love to connect with you, answer any initial questions that you have, talk about a specific franchise, and detail the exact process that I use and have taken hundreds of people through to help them understand franchise ownership, find the right franchise for them, and conduct the necessary due diligence. Click the link in the show notes if you'd like to schedule a free, no obligation strategy call. I look forward to talking with you. And now back to the episode. And who did you buy it from? Was it the original founders that you acquired it from?
It was, yeah. It was the founder of the company.
Yeah. And you said they had about 100 units, somewhere in that range when you acquired. And I think you see that pretty commonly, right? Where, the founder of a franchise can get it to a certain point, but then, for that brand to really continue to evolve and to kind of go to the next level, you need some outside, perspectives, some fresh energy, probably more capital to come in. And it sounds like you guys were able to, identify some low-hanging fruit, modernize the business a little bit, leverage technology better. Yep. I imagine a lot of what you did was, getting to know the franchisees and listening to them and, asking a lot of good questions, because you're spot on that, if that alignment between franchisor and franchisee is not there, then it can be very hard for the franchisees to be successful. And, at the end of the day, that's what's going to fuel the growth for the franchisor.
Yeah, no, 100%. And I was, coming into it knowing I wasn't a franchise guy, right? I had business experience. I'd come off of a pretty good sized win, helping to turn this company around and built a business there within that bigger company and such. But, I didn't know what I didn't know, right? And one of the things that, I had a family office partner in this, and I said, I think one of the things we want to budget on the front end is really just put me on a plane and go talk to all these franchisees, but not just, hey, just get on the phone. No, break bread with them, get inside, visit their studios, meet their employees. And it was invaluable. And I did that for the first, 4 to 6 months. And we had a few kind of regional meetings and that sort of thing that helped. But I went in, I can't even remember how many studios, but quite a few, almost all of them, frankly. But that was, and to your point, listening and hearing what concerns they had. And this was a system where the founder, I give him a lot of credit that he recognized that he took it to a certain level and it was successful. I mean, getting to a 100-unit system is no small order, right? Lot to get
easy.
That. Yeah, not easy.
Yeah.
But it needed, we needed more technology. We needed all the things you said, and we put all that in place. And, we had, happy franchisees with surveys we did and all that kind of stuff. And yeah.
So how long did your tenure at Speed Pro last?
Yeah, I was there about 3.5 years. And I exited I sold my equity back to my partner and helped recruit the CEO that took my spot. And it was a smooth landing for everybody. That was important for both of us. And, system continues on. The family office continues to own it. It's on to the second CEO after me now. Paul Brewster is running it. And, I will come back to we're still kind of engaged in that system, which is a fun story. We'll revisit, I bet, here in a minute.
Yeah, for sure. So then you kind of gotten some firsthand knowledge of how this whole franchise thing worked. As far as I understand, your next venture into franchising was on the franchisee side instead of the franchisor side.
Yeah,
tell me a little bit about that.
Yeah, so that was kind of a fun journey, right? So it was kind of goes back to that mastermind group that we were talking about earlier, right? So it's all about your relationships in life and business, I believe, very much so. So one of the guys in our group is a guy named Omar Solomon, who is one of the founders of College Hunks Hauling Junk and Moving. And he knew I was kind of ready to do something different, and he said, "Well, we have a franchise in Denver that is underperforming, and we're kind of getting ready to do something with it. Don't know what to do, but man, you would just crush it if you wanted to jump into this." And I was like, "Ooh, not sure I want to do that, but let me never say no. Let's dig in, right? Let's see what it's all about." And he said, "Well, just do me a favor and reach out to this guy down in Orlando who had just come in maybe 6-9 months prior to me. And he took an underperforming location and was just absolutely crushing it, right? And the why of that one was he followed the system, right? And they had a really robust system in how they went about their marketing, and the culture piece of College Hunks still really stood out to me. In fact, like I'm a pretty thorough guy that does due diligence on things, whether it's now for my clients, on the advisory side or when I'm buying anything, certainly. And I went and visited probably 4 or 5 of the top franchisees in the system. And there was one consistent red thread that went through all that was the culture that these guys had, right? College Hunks, I'll just name a couple, building leaders, listen, fulfill, and delight the customer, right? Those are really things that the locations that did it well, you could see it in their numbers, and you could see the guys. I was there at the morning huddles watching them tell stories about how did they exemplify their core values. So that was like, and I said, you know what, I think I can do this. It's very actionable. Denver's a large, big market. We had a really nice territory in the kind of heart of the metro, spanning a little bit north and south as well of the core. And we jumped in, right? We acquired the business and really quickly grew it. It's just following the formula that was already there, right? And following the guy in Orlando, for instance, and just, we started out with 2 moving trucks, 2 junk trucks. And then by the time, we put it on market to sell it. And I did it myself because I know how to do that kind of thing, which we'll get to. And what my role. But we had a really good outcome on that business. We scaled it, to into the millions in very short order. And it just really was following the playbook, and that was already set
Yeah.
up for us.
I mean, I like that story because, man, I have this conversation with people all the time, as I'm kind of coaching them through the due diligence on franchises they're looking at, right? And I kind of prep them because just like you did, right, you want to go and talk to franchisees, meet with them in person if you can, but at the very least, get on the phone with them, jump on a Zoom call with them, and you just want to learn from them, right? And I kind of prep people. I'm like, look, every single franchise out there has top performers, underperformers, and everything in between.
Yep.
And it's good to talk to a mix of all of them, right? But you do have to understand that there are underperformers, and 9 times out of 10, in my experience, they're underperformers because they're not following the system, at least in some capacity, right? And to this day, it still blows my mind how many people buy a franchise and then don't follow the system,
Totally.
but it happens.
Yeah.
And I would go out on a limb. I may be wrong about this, but I'd go out on a limb and say the franchisee in Denver for College Hunks that you bought the business from would have, maybe said something along the lines of, well, this market's just different, right? Yeah, I know the guy in Orlando's crushing it, but this market's different, right? We've got mountains to deal with and curvy roads, or, we've
weather,
got more competition,
whatever.
Climate, snow, whatever it is, right?
Yeah.
You've seen as many, if not more, examples than I have of someone coming in, buying out the underperforming franchisee, following the system, implementing the playbook, and then within no time, the business is turned around. It's performing, then it's overperforming. And it sounds overly simplistic to say, oh, what's the difference? You're following the system. But, that culture piece that you mentioned is so important too, right? Because look, any franchisor out there is going to tell you they have a culture. They're going to tell you that they have core values, but it's the ones that really implement it and live it, as part of their business, not just something that they talk about, because it sounds good. And I think that's part of the challenging part, for franchisees when it comes to implementing the system or the playbook is, things like building culture, right? Not everyone's going to be able to come in and, lead a team and inspire a team and create that culture, even if that's what the playbook tells them they need to do. So, I'm curious, like, how are you guys able to do that after taking over this underperforming? Like, did the staff entirely turn over? Were you able to hang on to some of the employees and get them on board with, the way you guys were going to be doing things going forward? Like, what did that look like?
Yeah, I think the first thing just to touch on, right? I think it is very much the dynamics of the system that underperformers don't follow it and they underperform, right? It's just the way it is, and it like you said, it sounds simplistic. Just follow the play, like run the play, but it is that simple. Like I don't know how else to say it. Just we went to Orlando, like I said, saw what they were doing, went to Atlanta, saw their play, and then we said, okay, we can do this. And the ones, they're always excuses, and it's somebody else's fault. But this was, perfect example in Denver, perfect example in Orlando. Someone going nowhere, and then we come in and do it. And it's not rocket science. It's just the franchisor knows what they're doing. I particularly like this one in that they had a couple of company-owned operations, which isn't always the case in franchising. But they, that angle is that they know how to run the play because they're running operations on their own, right? So we came into this one where this was, clearly not running the play. The owner was very absentee. There was no culture. There was no huddle. It was just like, what do we need to do to kind of survive, frankly? And we saw, again, from seeing our fellow franchisees, we said, okay, here's the play we got to run. Pretty straightforward. And the culture we have to do is critical, but we don't want to be there in the business every day. And I knew that kind of going into it. I had other things I wanted to accomplish. And so instilling that culture day one is really, really powerful. And it was a big learning lesson for me because I was like, what's culture really matter? But it matters. It's everything, right? It just really is everything. So in terms of the staff there, we had only 3 people. They all stuck around with us. And we just said, hey, this is just a reboot. and one of them is just an amazing success story. He's now part of corporate, and is a trainer there, and it's just an amazing story. His name's Billy Marcoux. I'll give him a shout out and put him in the show notes on his Instagram or whatnot. Billy's great. Yeah, Billy started in the Long Island franchise. Billy's had some ups and downs in his life, but the College Hunks really turned him around, which is an amazing part of their story. And building leaders is that core value. Like, just really powerful what that brand has done for people. And Nick and Omar have been really successful. They've been entrepreneurs of the year, I think, with E&Y and at IFA. I think they won the award this past year. So they built an awesome system, right? And I think that's a piece that we want to touch on today, like the differences in the systems and all of that are out there. But these guys have done a really nice job in it. And for us, it was like, hey, we can follow the playbook. And then so that's kind of the Hunk story. Shall I kind of get into the Primrose piece here?
Yeah. Because you got one other venture to date where you've personally had ownership in a franchise company, and that's Primrose. So that came after you sold College Hunks, correct?
No, not after I sold it. This was, you could call me pretty insane, but we actually bought both of these companies within really 60 days of each other. On the front end of it.
Okay, wow. Yeah, I didn't realize it was that close together. Yeah, you might be a little insane, but in a good way.
Yeah, the only reason we were able to do that was the fact that I had a partner come into that one with me. I found the deal, got it under letter of intent, and brought them in on the due diligence, and they were the ones that were going to operate it. So that worked out that way. But I could not kind of be the main person in two businesses. I'm not nearly that good, talented. It doesn't work.
Yeah, we tried that too. It's manageable for a very short period of time, and then you get spread too thin.
Yeah, it's just not. Yeah, it's not advisable, right? Back to that focus piece, right? Me getting into franchising, I was like, just dive into this. If you got two things, your time is spread. We all have certain family obligations too, right? It's not all business, and your head's going to explode, and you're not serving anybody well, in my opinion.
Yep, spot on. So how did that? So did that kind of come about because you were just kind of looking for your next thing, and then it sounds like that and the Hunks opportunity kind of both fell in your lap at the same time, but you had some operating partners in mind for Primrose, which is why you were able to kind of pull both of these deals together. So going back to Hunks, how long did you own that before you guys sold it? We'll get right back to the episode, but I wanted to quickly share a free resource with you. If you're curious about franchise ownership and want to learn more about how countless people, including myself, have leveraged franchising as a way to create more freedom for themselves and to take control of their livelihood, I've put together an ebook. It's called Franchise Wealth Creation, and it's the perfect starting point for anyone that's just curious to learn more about this whole franchise thing and how I've helped hundreds of other people navigate all the steps involved in understanding and researching franchising. So click the link in the show notes, fill out a short form. I'll send you the ebook. I think it's a great starting point if you're curious at all about learning more about franchising. All right, let's get back to the episode.
Yeah, we held that for about 18 months, almost to the day. It was a really quick turn.
Oh, wow. That was quick then. So you really turned it around quick.
Yeah, we ramped it. It was really just a quick, put more trucks on the road, have the guys to go run it, have the culture, and drive lead flow, right? And we did lead flow we had a good PPC agency, the pay-per-click, that were driving leads to us. Folks would either book online or call the call center. So one of the things about that system, right? I think as as folks working with you, look at like what's the franchisor doing to help me in my business. I like to say in a pretty simplistic way, but College Hunks took the sales part out of the equation, right? Yeah. We had to do the operations and the finance piece, but the sales and marketing really were handled by the Zor. We had to pay for it. Certainly nobody's going to do it for us, but huge. Yeah, they booked literally, no joke, Wes, like your calendar would just, boop, a job would pop on. And you're like, whoa, how did that happen? Well, it's all the stuff that's happening in the background, right? And we just had to make sure we could execute on it. And that business, the junk side was all about same day, a big time same day service, right? So we just call the call center, and they would just pop it on the calendar. We'd have 2-3 trucks at the end, running, and our operations manager would call, the team, like, hey, I got this job scheduled. After you're done, we told the customer it's a, 11 to 1 window. You should be good. Yep, got it. And they would just execute.
Yeah, it's kind of an occupancy game on the junk side of things. And
Yep.
I mean, we've used the local College Hunks. I mean, hell, at least 6 or 7 times in our local area, and it's always been same day or next day, where like I'm in the garage, I'm like, we just got too much crap, like let me call these guys, can you get out here this afternoon? Great. Or if not today, like tomorrow, great. Been kind of a spur of the moment type of thing. But yeah, that piece of the franchisor handling sales and marketing, handling scheduling, that's a big differentiator, that they can, for the most part, handle the sell too. Because to your point, yeah, you pay for it as a franchisee, but you're going to pay for your marketing as a franchisee regardless of what business you're in. I'd rather the franchisor have, the right systems and processes in place, things like a call center, so that, me as the franchisee, I don't have to hire, train, and manage someone to answer the phones. That's all happening, at that call center level, where they have people that's their sole job, their sole responsibility. And, look, a lot of these, because I'm very firm believer that any of these service-based businesses, especially, a call center is critical in a franchise. But still, a lot of those, like our Shelf Genie franchise, I think you're somewhat familiar with that business. We've got a call center. They do a great job of converting leads into sales opportunities. But, we as the franchisees still have to cultivate a team of high-performing salespeople that can go out and run these in-home sales appointments and convert them. And that's where you see the most variance in franchisee performance in a system like that. Is some franchisees have high-performing sales teams, others have average ones or underperforming sales teams. So a business like College Hunks, where the franchisee isn't even, as responsible for the outcome of the sales, that's kind of unique. You don't see as many businesses that are that kind of turnkey from a sales and marketing standpoint.
It's huge what they do. You're right. It eliminates the variability of it. Right. You still have those kind of tiers of performance, of course. Right. Different people are better operators because there's more to the business. But I liken it to like any business in life. There's only so much you can kind of hold on your plate. Right. Stuff spills over. Right. So if you can kind of a core function of business, give it to somebody else, the franchisor, to handle that, frankly, they're going to be better at it, right? If you're staffing a call center, you just can't do it. They've got the scale, they've got the volume, they've got the incentives, they've got the trainers, they get a real call center manager you can pay a real wage to. I mean, it works, right? So they built there's no mystery why they're a $300 million system-wide sales plus system, right? It works, and they built a great brand that's recognizable, all of that. So
yeah. All right. So you guys were able to ramp that up and exit it pretty quickly. What's the Primrose story look like? And tell people what Primrose is in case they're not familiar. I mean, it's a pretty established, recognizable brand, but in case anyone's not familiar with Primrose.
Yeah, so Primrose is one of the leading early childhood centers, right? So think of a preschool, essentially. Primrose, one of the leaders, Goddard School, Learning Academy, that kind of whole sector. Montessori schools would kind of fall into it. I'm not sure they're a franchise, don't believe, but it's one of those. Real estate. There's a brick and mortar component to it where naturally the kids are coming to it, and you've got executive director that's running the day to day of it, and then you've got just different classrooms, and it's from I forget the youngest age, but it's real little babies all the way to basically there's even after school programs for middle schoolers and stuff. But the core of it is kind of before you go to kindergarten is what it looks like. And a big system, really, really mature system, and kind of a different animal to it. We saw that as an opportunity. I was kind of looking for the next thing I would spend my time in, and that deal crossed my desk from a business broker that I knew. It was down in Colorado Springs. We live in South Denver. And so I was like, this kind of makes sense. The unit economics of a Primrose school are really compelling. They kind of print money, and dual income families,
It's kids, man.
spend on their kids.
Us parents will cough up
Yeah.
the cheddar for our kids
Yeah.
without even really thinking about it.
Yeah. And this one, I'll tell you, because, this is one, it's a mature system, right? Pretty high unaided brand recall of Primrose, right? People will know what it is. And, we looked at it and said, okay, they're making a lot of money. The intent was going in was, doing a mini roll up in the market. We ended up just doing one. And, I was pretty passive in it. I put the deal together, helped raise the capital, from SBA loan and all of that. And then my partners ran that business and ran it successfully. And then, they kind of came to the conclusion about 6 or 9 months into it. They said, you know what, we're making so much money out of one unit. The initial idea of doing a roll up and you kind of leading the M&A, we kind of don't really want to do that. So we'd like to just kind of keep it in our family. And they bought me out. It was very amicable, and I moved on from it, and it was a good role. But it got me a lot of understanding of like a really mature system, right, and what that looks like. So that was kind of a different animal, than the other ones that I've been involved in.
Yeah, which is, I think, an important dynamic for people to understand, right? Because as you kind of led off with, right, franchising it's more than just food businesses. There's so many different types of industries, that someone could look at if they're exploring different types of franchise businesses. But there's a lot more that you should be factoring in other than just, oh, do I want to own a business in, the signage industry or the junk hauling industry or the, childhood enrichment industry. You've got franchises of all different phases and stages of their growth cycle. And, if you're one of, 2,000 franchisees in a brand that's been around for 45 years, that's going to look and feel very different than being a franchisee that's, one of 100 in, Speed Pro that was founder led until now, a new, ownership group has come in and has really got their sights set on, taking the brand to the next level. It's going to look very different if you're an early adopter and one of the first 10 franchisees in an emerging brand, right? And I want to make sure the listeners have a sense of what you're doing now with Black Iron Advisors, because you're working with some very early stage franchisors. You're working with a variety of different types of franchisors at different stages, even, larger multi-unit franchisees that have built their business to the point where now they're starting to think about exiting. So again, big part of why I wanted to have you on, you've got all this perspective, right? And these are things that I really try to stress to the people that I'm working with, that, you need to be looking at and taking into consideration as you're selecting the right franchise for you. And, what's going to be a better fit for you, the very mature established brand, or something that's more emerging where you can probably be a little more entrepreneurial, or something in between. So anyways, I think there's a lot that we can probably unpack along those lines, just in terms of some of the nuance and difference between, these different franchises based on the stage that they're in.
Yeah, no, absolutely. And I'll tell you, just on the Black Iron question, what I do today, right? So after selling those businesses, I did we bought an e-commerce brand because we saw there was a big opportunity in selling product online, right? Falls into the better be lucky than good category, but we bought a bakeware brand 6 months prior to COVID hitting, and we all knew we had something to do, needed something to do.
Crushed it.
So it crushed. Yeah. That did well.
Yeah.
And then I did some stuff in real estate before, kind of going back to really at the core, what I love doing is deals. And I've done deals all my career in finance. So I joined actually a group that I'm in now, Black Iron Advisors. So we're a boutique investment bank, which means, we're licensed with FINRA. So we have credentialing and things like that, we have to operate, on our clients' best interests, and lots of compliance that kind of goes into that. So, but what we do is we almost exclusively represent entrepreneurs in, the sell of their business. And because of my operating experience in franchising, I do quite a bit of work on that side of it. Also with the College Hunks experience, the trades I know quite a bit about, just the dynamics
Mm-hmm.
there, and then consumer both on and offline. So I tend to sort of work in those areas, just relatability with my clients. I can just be a real value add to them in kind of just having that operator hat. One quick example on that. One of your guests I introduced you to, Gavin Lancy, who we helped sell his Savvy Home Smart Home emerging franchise to a venture-backed company, which is still I would put in the emerging side, but they had raised good bit of venture capital and have a lot of talent, big team behind them, and a big vision. And it was Gavin. This is kind of a good conversation to have because Gavin was in that process of like, hey, I've got 2 franchisees, I can go raise some money, go do this on my own, but if I can go team up with someone that's got more horsepower behind them, it might be a better fit for me. And so he's running their franchise sales and success, which means like the onboarding side of it and building a team there, and I think having pretty good success. It's still early innings. I think that deal closed just 4 or 5 months ago. So
such
still
a cool
early
concept, though. I love that concept.
Yeah, it makes a ton of sense. So Daisy's the brand that he's part of now. But on your comment, Wes, about just stages of franchising, right? So I've been kind of fortunate in my role now at Black Iron, right? So we're representing, if we just dive into the franchising side, as you said, so franchisors of every stage, which we'll touch on, and then multi-unit or large single-unit franchisees. And so what I do in our role, what makes us a little bit unique as a licensed investment bank too, is that we've got that operating experience where I can be value added, and we start relationships early with people. I will tell you, we're not, hey, Wes, I only want to talk to people that are ready to sell tomorrow. No, we start, and it's a long journey, right? And we often help them think about, hey, let's connect you with this consultant that may help you with the franchise development side of things. Let me connect you with my contacts at the franchise broker groups like yourself at Franchoice and things like that. So we want to be really helpful to people. Yeah. So those relationships start, 1, 2, 3, 4, 5 years before folks are ready to sell. And we can help them with planning along the way as well, with tax optimization strategies and all that stuff. But anyway, enough about that. Let's talk about the stages of franchising.
Well, look, on that note, and then we'll put a pin in it. Like, I want to have you back on at some point in the future to dive into that topic, right? Because, I think so many people that go to get into business for themselves, they don't really put a lot of thought into, okay, well, like, do I want to do this business forever, or like, what's the end game here? What's what's the exit strategy? It's something I ask people about, as we begin working through my process, usually before we've even recommended any franchises to them, right? Because if someone tells me like, hey, I'd love to, get into something, build it for 5 years and then exit it, versus, hey, I'm looking for something that I can do for the next 10, 15 years and then maybe get my kids involved. Like, I'm probably recommending different types of franchise business models based on some of those goals. But people kind of look at me like I'm crazy when I'm asking them like, exit strategies, or, what are your thoughts on exit strategies before they're even in business for themselves. But, I'd love for you to like come back on and say, like, for any business owner, what are things you should be thinking about, things you should be kind of beginning to put in place, and systems that you should be building that are going to make your business more sellable, easier to market and when you get to that point of being ready to sell. So anyways,
love to dive in on that. We have those conversations.
We'll do a part 2 at some point, kind of on that topic. But so what is your take on just kind of the spectrum of different franchises out there in terms of the stage that they're in? Like, is a more established franchise necessarily better than an emerging franchise? Because I think a lot of people, that their gut would tell them that maybe it is.
Yeah, I mean, I think, well, to your point about like asking people what their end game is, right? It's that Stephen Covey, begin with the end in mind, right? It's like, where am I going with this? What are my goals? And that's, I think, a big part of figuring out which system's the right fit for you, right? And it's not, for me, it might be at this stage of my life, I would want something, much more passive, where I could really put a 6-figure general manager to go run the business, and we're really in that owner's box. But a lot of people in franchising, are looking either for owner operator businesses or engaged, semi-absentee businesses. So I think, understanding goals, I think is really critical. But those stages, very simply, I think of it as emerging, right? Which is, we can debate on how many units is emerging. Maybe it's, the 10 or 20 or 50, but you're still early days of it, right? And that next one, maybe it's 50 to 150 is kind of that growth stage, maybe 200, where it's that growth mid-stage franchise. And then you've got the more mature above that, where I don't know the stats, but we could probably, look them up, that how many franchises get above 100 units, but it's a small number, right? Very vast majority.
Percentage.
Real small percentage, right? So, for me, those emerging franchises, I think, going into them, if you're really that more entrepreneurial person that wants to be really engaged with, hey, I want to kind of craft this thing, knowing that it's not all figured out yet. I want to be part of that journey, and I'm excited about it. I want to be a pioneer. I'm excited about where this is going. I think an emerging can be a great choice for that right person. But knowing that, you shape the brand, but a lot of those systems are not in place, right? Where you might get frustrated with it. Well, why did I buy in this thing? I feel like I'm creating the brand alongside.
It's not going to be fully baked, right? But I mean, I think a lot of people, especially if they have some business ownership experience or like you said, are just more entrepreneurially wired, like you're going to get to be a part of building it. You're going to get to really contribute to what that playbook ends up being, 3, 4, 5, 10 years down the road. And when, the 200th franchisee comes in, those best practices, that playbook that they're getting handed, you're going to have likely played a big part in helping to develop that. And that's going to play to some people's interests and strengths more so than others, for sure.
Yeah. And I think it's the right fit for the right person, right? If you're frustrated by lack of systems, which I would put me in that camp, frankly, College Hunks, for instance, they had that, right? We talked about that a good bit, right? But they had their own homegrown system that, Hunkware was what it was called. And they had an in-house dev team constantly making improvement to it. While I was there, they launched an app, which it's, and we exited that business in 18. So I can't even imagine that was 7 years ago, right? What they've taken it to now, and AI playing into it and all that. But
no telling.
No telling, right? But that, I'd say that middle stage, right? There's room for improvement. There's flexibility, but it's not like what it is that those emerging stage franchisors, right? Like, so, again, for us with Hunks as a franchisee, we followed that model and it worked, right? And that's what really, I think was really powerful, right? They had the system in place. Same thing with Speed Pro, right? We had systems in place. We added those as a franchisor when we came in as ownership. That was part of that kind of the operational improvement plan to take the brand to the next level. So you get that, but with good bit of input, right? I can tell you as the franchisor CEO, why I went on that tour immediately after buying the business. I wanted that input because these guys were running the business. We did not, in this case, have a company-owned operation. I kind of wish we had. We discussed it as a board. It wasn't part of our plans, but that adds, it's not a requirement. But I think to your point about talking to franchisees, I think the big thing when we did our diligence on Hunks, I didn't really talk to the low performers because I said, look, I'm going to talk to the high performers and visit them and see, can I do this? And if I felt like I couldn't, it wasn't in my skill set, that I wouldn't move forward with it. I didn't really need to talk to the low performers. And everyone knows going into it, look, I'm not going to be a low performer, but knowing what it takes to be that high performer was a way I approached it. So I just said, hey,
that's by far the most important, no doubt.
Yeah. Can I do the things this brand, and being really, really thoughtful about what those really take, like, and being like, look into a mirror and say, am I really good at XYZ that's needed to be successful in whatever that franchise is? And if the answer is not quite, then let Wes take you through another one, because there's a lot out there, right? You got to find that right fit.
Yeah, I mean, it's where I really start with people, once we've gotten kind of some clarity on the goals and, the end game and what are some of the things they're really trying to move away from, that they're looking to get out of business ownership. It's okay. How do you want to spend most of your time as a business owner? Like, what are the things that get you the most excited? Like, what are the things that you've excelled at the most throughout your career? What are things that you don't want to have to touch if you can possibly avoid it? And it's kind of developing that, ideal ownership profile, if you will, that you line that up with the right type of business where, that really lines up with what the best performing owners in that brand are doing. Like that's where you're going to find success, And so that's the approach I recommend versus going into it, which, a lot of people's natural tendency is, oh man, how cool would it be to own a business that does, X, Y, or Z, whatever, because it's something that you're personally interested in, or, you think would do well. Like, I imagine, for you, Boris, if you rewind the clock, 10, 15 years, you probably never were like, man, I hope I own a junk removal company one day.
Yeah.
Right? Like,
said never. Right?
That probably wouldn't have been at the top of your list if you were just going by like industry and like, products and services you were personally interested in.
Yeah. 100%.
You did the due diligence the right way, which was, all right, what are the top performers doing? And are those things that I think I can do and that, really do kind of fall into my wheelhouse, meaning there's a very high likelihood that if I come in and follow this system, I'll get the same or very similar results to these other top performers. That's the way it should be done. 100%.
Absolutely. Yeah. And that exploration process that you take people through, we do that with our clients now too, right? It's just, you're not selling anybody anything, right? You're just a guide on the journey. And that's why, honestly, personally, I refer folks to you that are exploring franchising, right? Because it's that you can be that Sherpa on that process. And similarly, when we're helping people with their companies, we don't expect that they're going to use us. We just want to add value and be helpful. And through that, naturally, you get opportunities to help people because you build that relationship and everything. So,
yeah, it's funny. I get more referrals from people that I've worked with that have not ended up buying a franchise than I do from anyone else. Because look, at the end of the day, like it's not going to be the right fit for everyone, or it's not going to be the right time for everyone. And it's every year I have at least 2 or 3 people that end up buying a franchise that we originally met and kind of started the process years prior. Yeah. And, they learned enough to say, you know what, I'm not quite ready for this, or the timing's not quite right. But, we went about it the right way. So when the timing was right, they circled back to me. And I think that's the way, anyone in a position like what I'm doing with the people I work with, what you guys are doing with the companies and the business owners that you advise, you don't want to be selling, you want to be advising. And sometimes, 100%. If you're giving good advice, they realize that, hey, it doesn't make sense for us to work together, or it doesn't make sense for us to work together just yet. But anyway, so
we see that all the time just on that point, right? Like we'll when we get involved with a client, we'll get their financials and understand their story and everything. And quite often we'll guide them and say, this isn't the right time. If you're going to take a step function growth in your business, let's wait. Let's check in a couple times a year. We'll give you a read on the market, but let's wait. And same approach.
Yeah, spot on. And that's what you want, with someone that's going to be in that kind of advisory type role, not someone that's like, okay, if you sign here, like, no matter what you say or show them, sign here. So it's my favorite thing about what I do is I don't have anything to sell anyone,
Right.
I used to be in sales, and now I like having nothing to sell. It's fun. But so what would you say to the person? So, the more established brand, you're not going to have as much latitude as a franchisee in terms of how you run your business. Whereas, something that's very emerging, you probably have a lot of latitude, a lot of autonomy as to how you want to run your business, but, not as much of those systems and processes. There's not going to be as much predictability, right? Because, as you're investigating a franchise, if you're looking at something like McDonald's or Primrose that's been around for a very long time, tons of outlets. It's a lot of data that you get to look at, right? You get to see a lot of numbers, and that's going to give you, to some extent, predictability, at least in terms of, what's the average franchise outlet generate in a year, and what's the average gross margin of, a franchisee outlet, and all types of metrics like that. You don't have as much of that with something that's more emerging because it's just not that much data yet. So you don't have quite as much predictability. What are some of the advantages in your eyes of, plugging into something a little bit earlier stage, if that kind of lines up with your profile, like you talked about?
Yeah, I think it's that. Yeah, it's really what are you after? What do you like? If you're more entrepreneurial, but you're not kind of ready to do your own thing, then I think getting into an emerging franchise is great, where you have influence and all that. We have clients like that now that take that on, right? And the middle stage is kind of in between, but the mature, I would say, like with a Primrose, an example that we lived, firsthand. You've got, one a really rock star, typical, like a management team, like legitimate management team that comes from big successes, and they really are on top of it, and they've got the systems really dialed in, where they're spending real money on technology. They've got a real marketing plan, and in that case, just curriculum that's really built out, that's really dialed in, where the franchisee role in some ways, kind of like the College Hunks we just talked about, it's about recruiting and retention of people and building that culture. But how you run the play, that's there. You follow it. The teachers, why they love it is because it's dialed in and it's all researched, and the success factors are there. They've got all that. You're not guessing. Like an emerging, we're testing stuff. These guys are tweaking, but it's limited. And to your point about data, right? There's 1,000+ franchises. However you want to slice and dice it, they give you the data on demographics based that are similar to your market. They have all the contractors built out and a build out. They know all of it. Like there's not a lot of margin of changing stuff, right? Which is if that doesn't work for people, that's a piece to consider. But if you're looking at predictability, like it's there, right? You know what you're getting into and all of that. So I think that those are the things I would say in terms of evaluating.
Yeah, I think you're spot on. One of the challenges, that I run into with some of the more established brands is simply territory availability.
Yeah, sure.
Vast majority of these franchises run some sort of a protected territory model, right? Because they don't want franchisees, out there in the marketplace feeling like they're competing against each other. So everyone kind of has their own turf or territories that they own. And, especially if you're in a market like, kind of like where you are, Denver, Atlanta, Dallas, Charlotte, Nashville, Austin, some of these markets that are just booming and small businesses are thriving everywhere you look. When I'm working with someone in those markets, I kind of prime them a little bit that, hey, just so you know, it's very difficult to find some of these really established, very recognizable national franchise companies that are still going to have, prime territory available. You may be able to find an existing franchise for sale, which, in my eyes has its pros and cons. And a lot of it's going to depend on all the things we've talked about: goals, skill set, et cetera. So that can be one advantage of getting into something earlier stage, is you're going to, have the opportunity to take down some of the prime territories that, the brand that's been around for 20 years hasn't had available for, 20 years since they started franchising.
No, it's a great point. Yeah, you see that. You're closer to that than me, but yeah. It's going to be tougher to get territory and stuff that's established. So taking a bet,
and that's not to say that there's not growth potential, if you get into an established brand, like the way you guys were thinking about it initially with Primrose, which was come in, open up a location, learn the business, and then start doing some roll-ups, meaning you're going to start buying out underperforming locations. I've seen quite a few people do that in established franchise companies, and they're just, buying out other franchisees, and that's how most of their expansion happens. But upside is something to look about. Upside growth strategy is another thing to look at as you're considering different franchises, because if you get in early, with a brand, not only are you going to have the chance to buy prime territory, you're also just going to be ground floor, right? So there's probably going to be, future growth opportunities that may be available to you should you want them in the future. You're still going to have growth opportunities, like I said, with more established brands, with some of these brands that are in the middle, but it's something to think about. I think a lot of people, when they look at emerging versus established, they kind of naturally assume that something that's more emerging is going to be riskier. And it's because, I think of the lack of data and the lack of predictability. And in a lot of cases, in my experience, there's some truth to that, but it's not always the case, especially in this day and age with franchising. Like you mentioned, Alan Young and what he's building at Art of Drawers. I went to work for Alan in 2015 or 2016 when he was still leading Shelf Genie, which he was one of the original founders of. And, Art of Drawers is basically Shelf Genie 2.0, right? So it's, technically an emerging franchise if you just look at it on paper and, when the business was founded and when they started franchising and the number of franchisees they have, open and operating. But, if you dig a little deeper and realize that, hey, this is actually like the second time this founder is kind of built and franchised basically this exact same business. And the first one, he sold to a multi-billion-dollar conglomerate of franchise companies. Like, that's maybe not quite as risky as it looks at first glance, if you don't understand some of that and dig a little deeper. So
and that's
something
where I think like,
to point out to people.
Yeah, I was just going to say, I mean, that's part of working with somebody like you that knows that kind of the story behind the story, right? Alan's a good example of that, but also, what capital's behind a group. If it's just I think what is risky, in my opinion, is you've got a franchisor that is undercapitalized, that's a first-time franchisor, that's in a sector that they don't know. I mean, these are all like red flags. I mean, typically, you're not going to find many of those in your inventory because you do a lot of that pre-screening at franchise. And why
but they're out there for sure.
They're out there. Yeah. I mean, and
those are the risky ones, no doubt.
Yeah,
like
those are risky.
You see, especially like these days, you see a lot of private equity and venture capital money, coming in and backing emerging franchise brands. You have, franchise development firms out there that are taking, equity positions in emerging franchise companies and helping them, grow and grow the right way with the right type of infrastructure and bringing in the right types of franchisees. So there's a lot of like sophisticated money and sophisticated like franchise experience that's helping a lot of these emerging brands do it the right way and avoid a lot of the pitfalls. So in my eyes, the risky plays are, you got a guy that's been in business for 20 years and he knows his business inside and out, but his friends and family have been telling him for 10 years that he should franchise it, and he's finally franchising it. But, that's a completely foreign landscape to him, and he's undercapitalized and he's trying to figure it out by himself. Like, that's risky.
Sure.
Look, at the end of the day, we're talking about business ownership. So there's always going to be some level of risk, right?
Definitely.
There's not going to ever be any guaranteed outcomes, even if you go and buy one of the most established, mature franchise brands out there. But there are absolutely ways that you can, mitigate the risk if you go about the due diligence the right way. And that, in my experience, doesn't necessarily mean just go buy the most established franchise. Like, do the real work, which is sit down, get clear on your vision, get clear on your goals, get clear on what it is you really want to accomplish and what do you want your day-to-day as a business owner to look like. And if you take that approach, I think you increase the likelihood dramatically, that you're going to find the right business and have success with it.
Yeah, totally agree with you. I mean, and that diligence is key, right? And doing the work and understanding and remembering all of this. People forget, they think franchising is an easy button, right? But it's not. You're still an entrepreneur. You're running a business. You're dealing with people. You're dealing with customers. You're dealing with suppliers. You're running a real business, and it's a lot of work. Like there's no easy button in it at the core.
I'm chuckling with my wife, and I joke all the time. We're like, man, if it weren't for customers and employees, this business ownership thing would be pretty easy,
Yeah, it'd be a dream, right?
Unfortunately, they're both very necessary to have any sort of a lasting business. We've also figured out, but well, look, I've kept you for a long time. We could talk about this stuff for hours. We'll definitely have you back on at least one more time in the future. But, for now, most of your time is being focused on the work you're doing with Black Iron Advisors. I know we've touched on this, but just to make sure, the audience is clear, who are you best positioned to help, in terms of business owners out there, and who should maybe consider reaching out to you to have a conversation, or at least following you, online and staying attuned to what you're doing?
Yeah, I mean, first off, pleasure to be on the show and enjoyed the conversation immensely. I think, for us, we just want to be able to serve business owners like of any shape and size to be helpful. That's kind of, we believe in just good karma in the long game. And so if we can, coming out of this conversation, if anybody wants to talk about my story, any insights that we could do, I'm happy to carve out a bit of time for that. In terms of what we do with Black Iron, as you said earlier, we're working with large single unit franchisees, kind of at or about $1 million of cash flow, multi-unit franchisees and franchisors, about $1 million of cash flow and up. We'll go a little bit lower if it's a personal relationship, things like that, but we're the exclusive financial advisor in helping them exit. And sometimes that's individual owners, but most often it's private equity owners that we're working through. And our process is simply, we get to understand the business, understand the owner's goals in an exit, just like you try to do on the front end when they get into franchising. And we work through that process and be their, basically their outsourced partner to go do that, because we do that all day long. I've done it for my own companies, and I've done it, now with clients and had good success. The other piece that makes us quite different is that we work on a no retainer model. So we want full alignment with our clients. So we basically just, we get paid when they get paid. You don't have to pay us a monthly nut. Business owners, as I've been, you don't like to stroke that check if you don't have to. And we want
to add overhead if you can avoid it.
Yeah. So so business, so that really resonates with our entrepreneur clients. And
it's a success fee.
Yeah, total success fee. And the one, if I may, just kind of the full circle story, which is just a fun one, right?
Yeah.
About 10 years ago, at Speed Pro, there was we had someone buy a franchise, and now full circle, we're representing them to exit. They've achieved their goals. Speed Pro was a multi couple $100,000 investment, $200,000 to $300,000 investment all in. They've since, recouped all their capital, and now we're selling that business, and it's going to be a multi-million-dollar exit for them. So it's just that amazing, full circle moment. Yeah. And it's just like you're cheering them on all the while, but they followed the play, did it, added value to the system too. They're a resource for other people, and now they're going to have a great outcome. So it's just a great life cycle of franchising and business. And I'd say franchising just accelerates it for people, right? Could this person have done it on their own and built a business? They can, right? Yep. They're good operators. They're good entrepreneurs, but it accelerates it. And we saw that with College Hunks too. Like, could I have done that? Sure. But I wouldn't have had the system to follow. I wouldn't have the call center. But that's
18
just
months. No, no way.
Nowhere near, right?
That's what it gives you the ability to run faster. Accelerator, you clearly went to Wharton. I didn't. Yours is much more, much better phrase, but that's what I always tell people. It gives you the ability to run faster. My wife and I had 2 7-figure businesses by the time we were, by the time I was 35. We were 3.5 years into, our first franchise, and could we have done it on our own and figured it out? I have no doubt, right? But not that quick.
Not that quick, yeah.
It really does accelerate things, and I'm glad you told that story, because it's cool on multiple levels. The fact that, you were the CEO, helped bring this person in as a franchisee. Now, a decade later, you're able to help them sell their business, in all likelihood to be a multi-million-dollar exit for them. And I also like that you pointed out, something like Speed Pro is not, this massive upfront investment, right? It's a couple $100,000, but there's the potential to build, a thriving multi-million-dollar business that you can value and exit, for multiple millions of dollars. And I think that's a misconception that's out there, right? Is that, hey, some of these lower cost franchises, they're just not scalable.
Mm-hmm.
And, you're not going to be able to build something that you can sell one day. And that's simply not the case. There's not a direct correlation between the more it costs to start a franchise, the more lucrative the franchise can be.
No, 100% right. Yeah. And I think the other piece, just to make sure your listeners, there's no sticker shock, even a couple $100,000 is not a trivial amount of money, right? In franchising, we've got this thing called the franchise registry, and brands, go through that process, and then they get basically approval to get SBA financing, which is, really one of the wonders of the American economy, that we have this, that allows you to go into businesses with very little capital, the right business plan, the right capitalization, certainly, to do it, but you don't need hundreds of thousands of dollars to do what, the story that I told, right? And there's countless other ones like it.
Yeah. And the SBA provides certain, kind of guarantees and protections to banks, and the banks like to lend for franchise businesses as compared to startups, because in the bank's eyes, there's a little more certainty, a little more predictability there. So, good point. Most people, even very high net worth individuals, are not self-funding,
right,
franchises in their entirety. It's like most real estate deals, you're putting as little of your own cash in and using as much of someone else's money as possible, usually the bank's money. So, man, good stuff. Thank you for being so generous with your time. I know we're coming up on a hard stop here, but for those of you listening, I'm going to link all of Boris's social media, email address, LinkedIn profile, website, all of that will be in the show notes. So if you're an existing business owner, go connect with Boris. If you can't tell, he knows his stuff. He's been in your shoes, and, we as business owners should all be thinking about, an exit at some point down the road, even if we don't know when that will be. And, Boris is a great person to have, in your contacts list when it comes to that. So, Boris, thank you so much, man. Really appreciate everything. And thank you for dropping in here on the Path to Freedom podcast.
Yeah, this was great. Thanks so much, Wes. Feel free to reach out, everybody.